Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the morning call. Well, we finished the week last week in red. We're kicking it off today down about 6 handles on German IFO data and also on Chinese manufacturing data. So this is going to be a key question this week. Are we going to see people window dressing or profit taking as we round out the end of the quarter?
Right.
And then what goes on into Q4?
A lot of people are saying it's either are they going to rebalance or chase. At this point, I think most of the smart money is saying they're going to rebalance because for September, we're up almost 4% at the high. So historically, September is a horrible month. So if we finish up 2.5%, it's still a win. It's just a question of when you got involved and how you traded it. As far as last week's action, you know what? We consolidated. We hit a high of 1474, I believe, 2 Fridays ago. The oscillator was plus 60. The RSIs were screaming. A great signal to say, okay, sell some excitement, put in some hedges. Last week we went sideways. This week we're opening lower. We'll see what the bears have. We'll see if they can push us to the breakout from a few weeks ago, which we'll go over in the chart, and see if we test the 21-day moving average, which is still a very healthy spot to test.
Well, you're definitely going to see a lot of volume and volatility come back into the market because, again, Friday is the end of the quarter, but there's a lot of managers out there who aren't even performing at their benchmark level. So I still think that you're going to have to see some of that buying come into Q4. But for today, how are we looking at the chart?
Chart, we're down 6 handles, so let's take a close look here. You know, macro version of the S&P, you'll see, you know, a lot to like here. This was the October 4th low, not even a year ago. This was this year's low, you know, of June 4th. Since then, a spirited move all the way to the highs, which we just mentioned, you know, which came in at 1474. If you take a closer look here, you will see during the course of the building of this cup and handle pattern, you know, every time we rallied, we held, you know, the 8 and 21-day moving average. Then recently, August 3rd, you know, the market got energized to all of a sudden hug the high end of this range before we wound up consolidating for about 12 sessions. And if you look here on September 6th, POW went sideways for 4 days and then went again into when Big Ben announced QE3, that capped out this move or capped off this move. So since then, it's been a little bit choppy. You know, managing positions, managing your expectations has been key. Last week on Thursday, we put a low in at 1449. So I would say that's the first thing on the SPX to watch. You know, that's right here. You know, if we start to open below this and hold below this, there could be a move to test this last breakout area. Why not? If you look right here, the 21-day moving average now comes in right around 1436. If you look here at the breakout area, that was about 1438 to 1442. So I would say if you put on some hedges, this would be more of a spot to cover your shorts, look for good longs versus pressing into this area, because anyone who's pressed into support definitely is a bit frustrated.
Speaking of outperformance, one of the most lucrative themes for 2012 we're going to look at in our sector spotlight are the home builders. Most shares there have performed by 2 to 3 times. It's, you know, doubling and tripling is pretty significant there. Let's kick it off and look at the XHB, which is the ETF for the sector.
The sector has been leading the market all year. It had a potent move in the first month. I remember going over with Jim Cramer on his Mad Money off the charts. We talked about the chart showing strength, giving us clues that housing could be a positive spot this year, and it has been. You look at the chart where we are now in the XHB, you will see there's been multiple times to buy it, you know, right here, right here, right here. And then since then, it's been riding the 8-day. So the question is, can it continue to ride the 8-day, which it's been doing since August? So at this particular point, you take a look here. This is support number 1. If it holds above this 25.42, you're not going to see much of a pullback at all. But there's no reason that you can't come in a little bit. So at this particular point, if the market remains under pressure, I would say watch the home builders to see how they act. You know, I think as long as it stays above 25, the same composure that we've had here will stay intact. And who knows, if they want to shake the tree and get us down to the 21-day, that's fine. But that that hasn't happened since July actually.
Well, you're definitely going to see some positive news flow come out of the sector today. Lennar just reported their numbers at 6 a.m. and what a print they had, beating by 8 cents, up $2 in the pre-market. Do you think there might be some room to chase here, or do you expect people to come and take some profit out of that?
I'm not long Lennar, but you know, if looking at the chart, I wish I was.
Right.
I've been like, I traded it back and forth. But to me, if you look at the chart here, this could be a bit of a sell the news. I'm not saying to short it, but all I'm saying is the size of the move that we've seen. This was a great entry when it traded above this wedge pattern. Then you had this descending channel. I think this is when we listed it off the charts. Then you had another move right here. So into this extension, after this day up, another day up into this, you could see a pause. So what I would say is, if you're in anything more than a tier 2, definitely sell to a tier 1. And if it opens up and closes on the lows, that could give us a signal that a rest is due, and then we'll look to see the pullback there.
Another significant momentum name we're taking a look at is KB Homes. This was the top performing stock in the market on Friday. Another one is your momentum here. I'm not quite sure if it's it's a pretty explosive chart. Take a look at that. I think it was up 16% on Friday. Yeah,
like I was in here on Friday. I was celebrating my 40th, and thanks for all the well wishes. But anyway, look at this tight pattern here. That's when shorts finally capitulate. Look at this, move up, slow, consolidated, and pow, above this 1365. That is a wide range bar that traders love. So I'm sure if guys are at their desk looking at strong groups, that's when you bought it. Today, coming in, I don't think you buy this up here. It's just too extended. But if you've been involved, and I think all these lines are here because this is what I've driven, I've ridden in the past, sell something to this up move. Congratulations. This has been a hell of a move for KBH.
Moving along to the retail names that are associated with the home builders, we're going to kick it off at Home Depot, which has been the leader in the group, trading at 20 times, but it does deserve that multiple. Consistently beats on same-store sales, and their operating profit margin is at 10%.
Yeah, this has been a very big winner. 2 years ago, my retail stock of the year, CNBC. Since then, just been an amazing run, and just shows you could be a stock picker. Equity markets aren't dead. You have to time them a bit, but if you look at the trend here in Home Depot, wow. Look at it. I'm not even going to go further back, but look at the trend that's been to the upside. Now, if you want to talk short term, recently, a little bit choppy up here, but still above the 8-day moving average. Your last trade was when it cleared this resistance right there, give you a nice 2-day move. It is flagging right here. I would say short term, it probably needs to go horizontal again, like it did during this time period before going. So at this point, I wouldn't be chasing Home Depot, but if you get a pull up, pull back into the just say the 58, 70 area into this 8-day, I'd say, try and nibble some. And if we do get more pressure from the bears at this spot, I think this is a great entry if you sold some excitement, and that comes in right around 57.63.
Moving along to competitor lows, this one's trading at 18 times, and even though it's a little bit cheaper on a relative basis, they were not executing on the same-store sales or profit margin metrics like Home Depot is. And I also read something interesting in Barron's this weekend, that Home Depot has more of a presence in the Northeast market, which has fared the economic downturn much better, whereas Lowe's has more presence in the South. So that could certainly be one of the reasons why Home Depot's firing on better metrics than Lowe's maybe.
Gotcha.
I learned something new this weekend.
I'll tell you, when I go, when I go into a parking center or a parking lot, they have both Home Depot and Lowe's. Now, I go to Home Depot. I just, whatever, psychologically. Anyway, if you look at the chart, you'll see here that, it's had to move off the lows, but it's been a laggard. Look at the resistance up here. Look where it is versus, again, look where Home Depot has had a huge move, no supply to the left. You also saw that with Walmart and Target. So this has been a little bit of a laggard type trade, laggard type catch-up trade, but it shows that, you can time these things. This was your last breakout. It broke out above this 28. It closed strong on Friday, which a lot of things didn't, so maybe short term, there's still demand there, and then here you go. This would be your next resistance area. So at this point, it's in the game, but it's more of a laggard type trade. So I'd just be a little bit more cautious there.
All right, guys, we're going to go to a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
Welcome back to the morning call. We're going to dive into the trenches and take a look at retail names and trends going into holiday 2012. When I was in Chicago, I met with Lauren Sebastian of BigBloodHair.com. She is a celebrity blogger, and we spoke about different trends and stocks associated. And she's saying for holiday 2012, accessories and denim are really the place to be, which I'm excited about because I love my accessories, my shoes, and my bags. We're going to kick it off with Francesca's, a name we haven't really spoken about much, ticker FRAN. Went to one in Chicago, love it.
Really?
Love it.
I don't think it's here.
They have 1,000 stores. I wasn't aware of that. It's a lot.
Well, it's funny because on my chat room about a few weeks ago, everyone started talking about FRAN, and we had fun with the name. But meanwhile, there's been opportunity there. So if you look at the chart, to me it's a bit faulty. This was when I guess my traders were talking about it because you had a well-defined resistance area. So on this wide range bar above it, when it started to clear this area, which was 32.75, it was very exciting. And then, here you had a bit of a doji. I'm not sure if this was before earnings or what happened here, but this was a pretty harsh move to the downside. Okay, it did hold above the 200-day. It sliced through many moving averages. At this point, I think it needs some time to rebuild, some time to work this off. At this point, here's your lower level pivot. It did close relatively strong on Friday, but I would say, for my guys to start to get excited about this, it's going to have to start clearing, this, just say 30. What is this, 3160 or actually about 32? But so for right now, it's still, it took back over a third of this huge move to the downside, so it's negating some of this negative activity. I think with more time, this will be your spot to look for some momentum. For right now, though, it's an avoid in my book.
One of the reasons I love doing channel checks is Scott focuses on the charts, I focus on fundamentals, but when you go to channel checkers, you learn some things that you might not just see reading the balance sheet or taking a look at the chart. In Urban, which was a big surprise to me, it's not just that tween teenager audience anymore. There's a lot of people of my age, and I hate saying this, I feel old right now, that are really starting to shop at that accessory-driven, fun, kind of trendy stores, and that's where she's seeing some volume pick up.
Okay, well, this chart had a huge gap up, and it qualified for all of our look, whatever it is to look at it. So you take a look at the chart here. I'm fumbling also on Monday morning. Here's a huge gap up. Okay, so if you weren't in for this big gap up, this was your entry, right when it started to clear this range. Nice move, and then but if you look closer here, which I'll get you a look closer, this was a pretty ugly bar right here, which is not the end of the world. It actually took more than half of it back. So at this point, I think it's fine. You could be in a longer term. Perhaps it pulls back. It's giving up the 8-day. So I would say this is the 21-day. This is a spot to look to buy. And ultimately, you want to see this gap hold. You want to see the pent-up momentum here. So as of right now, I still think there's a lot to like. Market's consolidating. It's consolidating with it. When it starts getting above, 30, 39.95 or 40 again, that's when some momentum guys will come back in. So right now, if you want to be a fundamental player, you buy into this base, and then once it starts to clear 40, that's your ad. But for right now, you stay with it. Just don't stay with it with a lot of size.
Speaking of gap, let's take a look at the gap and what a year this stock has had. And I don't know why it's not my favorite place to shop, but for denim, Lauren still says that is going to be a key go-to, as colored jeans are quite the trend this year, especially your olives, your browns, your grays, because a lot of career wear is trending there as well.
That's very interesting. I have to tell my wife. And at this point, Gap has been a place to be. My guys aren't really trading it that much because it doesn't have the volatility, doesn't have the big moves, but it's an incher. And you had a gap up here to trade against for a swing trade. You look at Gap here, we'll go to the chart. You'll see this was a big gap up. Unfortunately, it never even came back down to test it for an entry. So at this point, it's trending higher. It looks good still. It's hugging the 8-day. A little bearish, small little bearish bar Friday, but that's nothing in the scheme of things. At this point, I think you stay with it as long as it stays above the 8 and 21-day. 21-day comes in right around here, and it looks fine. Hopefully it gets some good numbers coming back. Going back to school season, blah blah blah. And the trend is still there. It's just not that exciting as a trade, but as a holding some as an investor, you've been rewarded.
We're going to wrap it up with two footwear stocks, ticker DKS and Foot Locker FL. She doesn't think that we're going to see as much momentum there because those tend to be more back to school names. But let's take a look at Dick's.
All right.
I know. Okay, Scott, please.
Anyway, take a look at the chart. Here you go. A lot of guys have not really been talking about this one. If you look here,
I love Monday morning.
It did clear above this area. Boom. Technically looks fine. Above the 8-day, above the 8-day, above the 21-day. It opened, I guess, lower on Friday, closed off the lows. I still think it looks okay if you want to go, what'd you say, Foot
Locker?
Okay, Foot Locker. Pretty potent down move Friday for the short term. So I know if I was, holding on to this as a swing trade, this would be one little signal that, clean up some shares. At this point, I don't think it's any trouble. Here's your trend line. Here's a 21-day. But at this point, I know that if I was long this and I saw this action where it closed near the lows of the day, I probably would have been at it saying, this needs more time for momentum because look at the size of this move. So entries and exits do matter at this point. Make sure that this level holds.
I've never been more happy to get out of the trenches and go into quick hits. We're going to take a bite out of Apple, everyone's favorite name to trade over at T3.
Yes, and rightly so. It trades by patterns. It rewards every time frame. And you know, on Friday, the dealers were actually able to pin it at 700. So you know, they pushed it earlier in the week to get it to 705. Get people to buy the 710s, 15s. Then, if you remember, on Thursday they pushed it down to like 695, got people to buy some puts, and then you know, the dealers won in the middle at 700. Anyway. Short term, it was at 705. They brought it to 700. So if you look at the chart here, you will see on a very, very short-term basis, you know, a little bit of a negative. Okay, anytime it trades above a previous high, closed near the lows, it's a tiny bit of a sell signal. Okay, this weekend you saw a lot of news come out about Foxconn, about riots, this and that. So people are going to talk about disruptions in the supply chain. You know, what you need to look at is this. First of all, you need to know your time frame. As a macro investor, it really doesn't matter. I think you'll get higher prices at some point soon. As an intermediate trend trader like me, I am long this thing. I would love to see this thing hold 693.62, hold around the 8-day. This is where I'll be looking to add. Okay, on this day I added, and then I tweeted, you know, around 7:03. I'm like, if you added into weakness, sell some into strength for a potential pin. So I'm pretty light here. I'm long it, but I'm very light. I want to buy more. This is one spot, but I'm not going to get too aggressive if I don't see intraday trading signs, because you know, they could shake it up. It could come in and retest this area. This is 687. This high here is 685.50, and then the 21-day should move up. So at this particular point, I do think that the dip will be viable. I'm going to stay long some. If it closes below 693, maybe, you know, in my active account I'll get out, but I'll hold it in my swing. But overall, this, you know, I think the trend is strong. It's had a huge move since, you know, this, you know, the earnings miss, and you've had multiple trades along the way. One here, one there, another long here. You know, so at this particular point, remember when they announced the product and media day, this was your long, and then you always want to trim into some excitement. And now let's see if we could buy some back. You know, iPhone 5, the actual results I think will be coming out about the weekend sales. That's something to look at. And then you'll have the bears just trying to put videos of all those riots everywhere just to, you know, be rumor mongers, whatever.
Wasn't there something on Friday where a marketing person from Apple was saying that they contribute 0.5% to GDP, or it was, I don't remember the exact numbers, don't quote me on that, but the fact that Apple can actually be looked at for GDP contribution is tremendous.
Yes.
So pin it all you want in the bears. But anyway, moving along to IBM, this is one of my favorite names. I talk about it all the time. It's one of my favorite core portfolio holdings, up 15% year to date. It pays that nice, healthy dividend. It's, you know, it's a $200 billion company with proven history, still continuing to grow and investing in key areas like analytics and software.
Yeah, as a macro investor, it's been one of the mega caps to love. For an intermediate trader, there's been some good times to be involved, some cautious times, and I know more in the first quarter, I was long IBM for like 2 months or so, back and forth as the pattern was there. Then it just gave you a nice rally. So if you look at it right here, short term, you know, entries and exits matter, and I talk about that all the time. Here was a good spot to enter. When it crossed this area was another good spot. But you know, I don't love the, you know, the action right up here. So you have to measure your commitment. If you look at IBM, it had a little bit of a, you know, an outside type day here. So I'd say if you don't have commitment to this, I would put your stop here at 205, because you know, if it trades below this flag, you could get a retest right here, and that would be a better entry for more precision type buyers, which I am. So I'm not long IBM. I'd love to see a move down to about 202, and this would be a spot I would say for a swing trade. You had this opportunity up here. You know, I think you just wait a little bit or see if it pulls back to the 21-day.
Moving along to my 2012 pick, Mosaic, ticker MOS. My target was 65 for 2012. I'm taking that to 71, and I still think the story for the stock and the group in particular carries through 2013. Traders now, the corn story is over. They're focused on wheat and beans and fall and spring application. Ton of momentum here if you're looking at a little bit more long term.
Yeah, it's been a great move starting the third quarter. It started actually a little bit earlier than that. In this area, just like the market, it's just a little choppy. You know, you can't have big size. You can't always expect big momentum moves. So if you take a look at the chart of Mosaic, you will see that it had a very spirited move off the low here. This was your red dog reversal. This is when it cleared this little W pattern. And since then, you know, it's kind of going sideways over here. So this is your last level here. So you want to take a real close look here. So if you want to like dice it up a little bit, you know, for my traders, you know, for them to get back involved, to try and get a 2-day move. Remember, we saw the strength here, gave you a nice 2-day move before a short-term sell signal where it opened up and failed. And now it's still hugging the 8 and 21. I think for my guys to start to get, just looking for momentum here, it's going to have to start to clear 61, 62. But as an investor, you should stay with some and see if it holds above this higher end of the range. So if you want to do a range like this now, Here's the upper end, here's the lower end. If it stays in the upper end, you're going to see some pent-up bullish momentum.
Moving along to Coors, this is one of those IPO names that actually performed really well for this year in a less than stellar new offering market.
Yes. This goes to show you, like I always talk about new issues that have potential to be put in the drawer and, huge winners. And this was one of them. I talked about Coors, LinkedIn, and Dunkin'. Okay. And at this particular point, they're taking turns, whatever. Coors, this is a pure example of how everyone wins. Underwriters win, the company wins for getting money, investors that monitor earnings and see them doing well and see chart patterns work out, get involved in something that could be explosive. And if you look at the chart here at Coors, you will see, here's where it went public. Okay, so once it consolidated, this was an entry all the way down here besides this one before a major run. And then more recently, look where we closed up. So if you were a macro investor that liked the story, you made huge money. Lots of money in there as a trader too. And it was funny, if you look at everyone was, there's a game on Wall Street that gets played you have to learn how to play it. And they announced a secondary, so everyone was shorting it, thinking the secondary is going to be lower, it's going to be in the hole. Then PS, they announced a secondary and they raised their guidance. People are like, oh, that was sneaky. I think that was kind of genius. But anyway, wide range bar, closed near the highs, still looks good. I wouldn't be chasing it up here, but I just want you to look at this situation. And when we talk about potential winners at our IPOs, because most of them have come out of the last 4 or 5 years, this is how you get a huge winner. This is below 30, now you're almost at 60, that's a double. People want to say, how do you find a double in the market? Here you go.
There you go. Yeah. Well, speaking of IPOs, Facebook on Barron's, the cover this weekend to 15. Thought that was a pretty aggressive statement over there. So
yeah, on the front cover.
Yes, on the front cover. Let's wrap it up with the financials. They had an explosive week during FOMC week when they had that language regarding QE3 and further economic stimulus. Last week, they took it on the nose, down about 2.3% out of the 10 S&P sectors. It was the second to the worst performer. So it looks like they're digesting those QE3 statements.
And there's always a lesson to be learned. You talk about how things trade, chart patterns, relative strength, relative weakness, and the banks gave you a spirited move started by Goldman Sachs on September 5th. And then remember we talked about 9/14, September 14th, which is the day we hit 1474, the day the oscillators screamed. This group traded off the highs first. And I remember talking about that, tweeting. That's when I actually went short Goldman for a Q-type trade. You look at the chart here of the XLF, after a massive move from the bottom, after it energized here, you take a look at the XLF. This was your momentum entry right here. This was actually September 6th, a day after Goldman. Here's your flag type pattern. And then look at this, opened up, closed near the lows. This is a signal for short-term guys to get out after a big move, maybe even get short. And since then, it's been leading the way lower. And then if you look at Friday's candle, on the lows of the day, giving you clues it's not ready yet. So my next spot to watch would be right around here, 1560-ish. This is where I'll come in and I'm going to try and buy the dip here. I'm going to look at those banks and I'm just going to show you Goldman real quick because it's been helping to lead things. Like I showed you on the XLF, look what Goldman did on September 5th. Boom. This broke out, added to momentum here when XLF did not. And then that led the move to the upside. And then here's your doji close. Got short a little bit here. I covered a little early. But anyway, closing the red there. For Goldman Sachs, I think we're going to look to buy this thing. I would say a little bit closer to 114 or 114. I think the bulls need to make a stand there to have increased constructive action in the financials.
All right, guys, we're going to have a busy week. We're coming into the end of the quarter on Friday, so expect some more volume and volatility. Catch Scott at the end of the day as he wraps up the charts for us on Real Money Pro, Options Profits, and T3Live.com.